Update on the market. Olakomi Oshobu, Executive Director at Readings Investments, joins me now for more on that. Thank you so much, Olakomi, for taking the time out to join us. Before we go into overall market performance, let's take some results just out from Guinness Q1 2013. The numbers don't look too good. Revenue for the first quarter of this year down 5.4% to 22.4 billion. Profit before tax also down this time by 29.6% to 1.86 billion. Now, this is, of course, tracking the soft full year 2012 results that the market received before this one. So any reaction so far?
For now, there is no reaction, but to me, the result is not much of a surprise because it's a trend that has been, coming from Guinness for quite some time now. If you look at the previous year results, it was also down on the, last year, the full year result was also down on the previous one. So this quarterly result is just following the trend. But for now, there's not much reaction. As you can see that the stock has also moved down, in the last couple of weeks, from the high of, say, 280 or 260 something to about 230s now. So there is no more reaction, but the result is it's below expectation.
Well, are you surprised that for a Guinness, this is a big cap stock listed on the Nigerian Stock Exchange, although we did see poor 2012 full year earnings, perhaps we were expecting to see a rebound in numbers. Are you disappointed?
However, I'm sure the market should be disappointed because we thought that before the fact that the result came down was down full year, we expect that okay, quarterly result going forward you try and do catch up, but it's still following the trend of of downward trend. So to me, it's not a good result, and the market should be disappointed.
Okay, we'll see how the market reacts to that going forward. We'll still have about 2 hours or so of market trade. But let's look at the month of November so far. It appears it's turning out to be a profitable one for investors, and not just here in Nigeria. We're looking at the global equities market also rallying, particularly since the beginning of this week. We saw the Dow Jones yesterday shooting past the 16,000 point mark. So just wondering, because I know that foreign investors are also major players in the Nigerian markets. If we're looking at equities in Asia, in the US and in Europe looking more appealing to investors, will there be less participation here by foreign investors?
Well, the participation in our market has not been, good compared to what is happening in other markets. Like you said, all the other markets are more or less at the record high. But if you observe, we've been seeing a gradual increase in the index. The last couple of days, on Friday, yesterday, and today, the index is also up. I think, in preparation for the year end, you might continue to witness this uptrend for the rest of the year. So, normally we are slow to react. Even when the other market is also going down, the market here is slow to react to some of those things. But as the foreign investor continue to move into this market, we'll continue, we'll soon, trading, online real time with what is happening in other markets. But going forward, I think, and as the year is coming to an end, I expect the market to, inch up gradually.
Okay, let's look at Owando. I'm looking at the gainers so far for the session. I see Nestle, Owando, Transco, and Eternal Oil and Gas. But for Owando, I think that's a little bit interesting, given that the company released its soft Q3 numbers last week, Friday. Turnover was down over 20%. Net profit came down over 34%, yet Owando continues to rally. Do you think investors are looking past the numbers?
Well, if you see, when the result was first announced, the price came down immediately 10%, I think 5% immediately the result was announced. But gradually investors moved back into it. Reason being that you can see the likes of Fort Oil, Corn Oil, the prices they are trading. And if you look at the valuation of Owando compared to the others, Owando still present best value for the market. I think that is why the market is moving beyond the quarterly results, and I think Owando is into many things. So that is why going forward, I think people might be looking into the future. If they could close all those deals they are, currently negotiating, the acquisition of Conoco, Phillips, and all the rest. If they close all those deals, Owando will become a well-diversified oil company. Moving from downstream to both upstream, to trading and upstream. So I think market is pricing into the future. But still, I believe the valuation is still far better than the others. If you look on an EPS basis, Oando should be trading higher than where it is. The problem with Oando, I mean, has been the market not knowing what the management is doing all the time and doing many things. So market is maybe skeptical about can they see through all those deals. But if they could see, I mean, if all those deals materialize, then Oando should be far higher than the current price.
Olakomi, we're looking at the all-share index now above the 38,000 point mark. It looks like it's gaining more momentum. Big cap stocks, also some stocks from the some mid cap stocks also rallying. Do you think the market can sustain this momentum, or could we see some pockets of profit taken perhaps before the end of the week?
Well, I think market should sustain it, because if you look at this thing, even the banking sector are not even currently participating in this small rally you are seeing in the market. If they should join, which I think will, which will likely happen, because as we go into December, you see some of the banking sector, doing well, as you expect, because they are still the stocks that pay better dividend in the market. So you expect them to participate, and so that I expect the market to maintain the momentum.
All right, thank you so much, Olakomi, for your time. We're going to have to leave it there. Thank you so much for talking us through market trade at this time. Olakomi Oshobu, Executive Director at Readings Investments.